This stock has made a huge move, but is it ready for a correction? First off, read this disclaimer carefully. We are going to look at TAL education. It is in the zeitgeist I call Education 2.0. This is the distance from the 52-week low, average, extreme outperformance of the S&P 500. So yeah, the entire idea behind this theme is that education, the educational sector is a massive laggard when it comes to innovation. Hence, any company that tries to innovate in this space is heading into what we call a blue ocean. And yeah, the gains are extremely impressive. The weakest performer here is EdTech X, but some of the huge movers, I mean, this is just ridiculous moves. Okay, TAL education is here. I categorize it as education services. TAL is the ticker. Let's go to their website. Making education better with love and, most importantly, technology. It is a leading education and technology enterprise in China, which holds close the core development goals of being technology-driven, talent-centered, and quality-focused. Since its establishment, TAL has been committed to integrating the internet and technology into education to deliver better experience for children. Yeah, so this is something I am extremely bullish on. Tech is the future of education. This is a massively untapped market. Huge growth potential. Okay, let's look at some of the seasonality of the TAL stock between 2010 to 2014. Problematically, June is one of the it is literally the weakest month. If we go to from 2015 and onwards, here you see that this period here, May, June, July, are weak. Yes, within this period, June has been sort of strong-ish, but only 60% of the months the stock closed higher than it opened. But this is a risky seasonality for sure for June, and we are now in June. Okay, so let's look at the charts. Okay, within this entire time frame, weekly data points, the stock is up 2,304%. Obviously, that's extremely bullish, huge move, but there's a massive fat but. The thing is, you could make a very strong case that TAL, even though long term I am super bullish, for the coming month, you know, it might be a good idea to step aside a bit or potentially short sell the stock. The reason is, this move is simply a bit excessive, and looking at the history of this stock, you can see that pullbacks are very frequent indeed. The latest move is very aggressive, and there is a bearish divergence here. You can see that RSI, even though you see higher highs here, the RSI has actually been making lower highs. So there is a bearish divergence here. That's an issue, and it gets a bit worse. The accumulation distribution line shows that there wasn't a lot of buyers behind this most recent move. That's a problem. So there is bearish divergence between price, RSI, and the accumulation distribution line. Okay. The correlation with the S&P 500 is 62-ish% positive. That's nothing. It's not too strong. It's sort of like a Goldilocks. It's not too strong, nor is it too weak. Okay, but currently, obviously, the bulls are in control. Yes, long term I'm bullish on TAL, but pullbacks are frequent. As far as being a short seller, this could be a decent opportunity. If you do not want to short sell TAL, maybe you can sit on the sidelines and wait for a better entry opportunity. You can see that the 20-week moving average in purple, characteristically it's been a nice buying level. Hence, if we do get a pullback to that level, or maybe even the 50-week. That would be an interesting entry. Here are the daily data points. You see the bearish divergence here on the RSI here as well. We do see some pickup in the AD line here, but the recent rally has been on limited volume. When you see these big moves, for these moves to be really like fantastically bullish, you want to see it on a sizable volume. This is a bit of a euphoric. Bulls are certainly currently in control, so it's not a screaming short sell right today, but I would put this on my short selling radar. Okay. But to be perfectly clear, long term I am super bullish on Education 2.0. It is just that when there are pullbacks in TAL, they can be sizable. This pullback here, 17%. This pullback to the low here, minus 24%, okay? The norm for TAL is to have rallies and pullbacks. It is very cyclical, as you can see. But yeah, we are above all the moving averages. We are getting overbought now. Generally speaking, you can see here, looking at RSI going multiple years back on the daily data points, TAL is not a huge fan of being overbought, nor oversold. But you can see that being overbought is more common than being oversold. But that's because there are underlying very bullish trends for TAL. Okay, here is Finviz. You can see that the price book is a bit elevated, the forward PE as well. Okay, you can see here that the insider ownership is 84%. That's good. That's nice. The gains have been massive. It is up year to date 37%. That's really strong. Let's look a bit at the target price, okay? So the target price here, based on the analysts, are $61. As you can see, the stock is currently trading at $65.84. The target price, based on the analysts, is $61.48. If we do the math, that's a pullback of minus 6.6%. Hence, the stock is overextended. Yes, this is a bullish move, but this is a very cyclical stock. If we go to Saks.com, they have a number 3 hold on TAL, an F value score, F growth score, and D momentum, which leads us with a VGM of F. Yes, it's gone too far, and there is no dividend whatsoever. Hence, you are not incentivized to hold on to the stocks through every storm that comes there. Hence, if we do see some pullback, it can be a bit self-reinforcing, even though the long-term picture is certainly bullish. Something that is absolutely fantastic about TAL is that the beta is very low, 0.25%. That's really good. You get a massive mover for a low beta. Market cap is $37 billion US. Let's talk a bit about the educational sector and its relationship with technology. The thing is that this sector is a massive laggard, big time, okay? It's way behind. I remember back in the day when I went to school, it literally felt like walking into a time machine. I would leave my video games, my TV behind, and I would go to school and sit there with a pencil and paper, looking at a whiteboard painted with chalk. I mean, it felt prehistoric. Hence, it shouldn't be any surprise that many students feel extremely bored going in school. It is a very uninspiring environment, but tech can solve this. But there are good reasons why it is such a laggard. Number one, there is a massive generational difference in the love for technology. A very clear negative link between age and tech skills, meaning the younger people like these are very tech savvy, but their teachers are, of course, older, and are not that proficient with tech. Hence, many of these, older teachers, they have tech aversion, and that creates an incredibly unfortunate dynamic. The thing is that digitalization is incredibly disruptive to power dynamics. Hence, many teachers would feel very threatened by technology, because it means that these kids, at least when it comes to how to use these devices, they would know more than the teacher. I mean, they would literally teach the teacher how to use these devices. But I think that that's something we just have to deal with. Technology is simply too valuable for us to be, distracted by these childish power dynamics. Another important factor are gender differences. Males are far more interested in technology and outspend females by a massive 4x based on OECD data. As a matter of fact, depending on how you define technology, if you take into account both hardware purchases and digital entertainment, then men might even outspend females more than 4x. But yeah, there's a huge difference. 76% of teachers are female, and the reality is that when you have females that on average are less interested in technology than males, that also reinforces the aversion that the educational sector has to technology. Yeah. Another factor is class differences. Some argue that requiring technology is discriminatory because tech comes at a price. Tablets and laptops are not free. The thing is that you could, of course, reimburse low-income families. You could do it, very anonymously. I remember when I went to school, there was a very, frankly, stupid system in which if you came from a low-income family or you had some learning disability, then you would be handed a laptop that was like the official laptop from the educational system, and it came with like a tag, and basically everyone knew who got help, and that was extremely unfortunate. If we are going to reimburse, it should be like money that it should not be visible to other students that someone has gotten help. That's the point. But I do think that we should make tech available for every student, such that we can push the educational sector into the present, if not even the future. The thing is that, and this ties into this whole class differences debate, the fact of the matter is that tech skills, to a very large extent, explain class differences. Hence, by refusing to use technology in school, you are actually reinforcing class differences. Hence, there is absolutely no way to make a strong case against technology in school. Another argument, of course, is that technology is very it's a distraction, they will be doing other stuff. And the thing is that that's also a very bad argument. The value of tech in education is massively outweighing the disadvantages. So yeah, I'm super bullish on tech in education. So to sum up my take on TAL. Long term, I am certainly bullish. The problem is this recent move. Short selling could be prudent for the coming month. The trend here is rallies and pullbacks. Let's now look at the S&P 500 to get the pulse of the market. the correlation with the TAL and the S&P 500 was not super strong, hence we should, we can't base too much on the S&P, but as we can see, S&P is quite overbought, 74, over 74. We have to go all the way back here to get this overbought. Yes, this is a very euphoric rally. It is extremely bullish, but you could make a very strong case that we've gone way too far, way too fast. Very excessive move. I would be more surprised if we didn't get the pullback than anything else. As a matter of fact, if I were to put on a short selling position on the S&P here, and if I were to lose money by it blowing up and making a new all-time high, I would actually be okay losing that money, because this is so extreme. It's ridiculous. It's absolutely ridiculous. And you need to look at the bigger picture. This here and this should make you very worried, very afraid about being a bull and being a bear. Both are very dangerous. And you could make the case that we are forming something called a megaphone pattern. So let's get some drawing lines here. Yeah, let's make like a ray. Do it like this, like that, and make another array. Okay, if we can do it, I think we can do it like this. Okay, not perfectly, but yeah. If we zoom out a bit, okay, this is not like a perfectly. Well, let's change this one a bit, make it like. How should we do it? Becomes a bit finicky with these lines, but okay, something along this line. Okay, so this is what's called the megaphone pattern, and the characteristic of a megaphone pattern is that there's a dramatic increase in price volatility. We go from here having these normal moves, not too big, not too small, to now having massive pullbacks, huge rallies, extreme pullbacks, extreme rallies. Based on this megaphone pattern, it is possible that we certainly could make a new all-time high, but this is not healthy. And many megaphone patterns, they do resolve themselves in rather dramatic ways. So that's just something to be aware of. Because when there is a lot of volatility, you get fatigue in both directions. The bulls get spooked and the bears get spooked, and that can quickly lead to a situation where they start just leaving at least the S&P, because it becomes a bit too scary, and that can be self-reinforcing. Okay, whatever you do, of course, let the trend be your friend. Have a great day and be diversified.